India's renewable energy story is entering a decisive scale-up phase with solar manufacturing at its core. Installed solar capacity is set to nearly triple from 106 gigawatts in FY25 to around 290 gigawatts by FY30, driven by utility scale additions, a strong policy push, and rising captive demand. At the same time, Indian manufacturers are emerging as global suppliers, supported by US IRA linked incentives and supply chain diversification away from China. With strong domestic demand visibility, export tailwinds, and large capital investments underway, many companies are also diversified into battery energy storage systems. So, how compelling is the investment case? But this opportunity is not without risks. The sector remains highly policy dependent, with safeguard duties and PLI schemes creating uncertainty. While India is set to sharply reduce reliance on imported cells and modules by 2030, dependence on upstream components like wafers and polysilicon is likely to persist. Aggressive capacity expansion across the industry also raises the risk of future overcapacity and consolidation, especially among smaller players. Exports remain heavily concentrated in the US, exposing manufacturers to tariff risks and policy shifts. And finally, rapid technological evolution in solar PV continues to challenge manufacturers to stay cost competitive and efficient. This is Deep Dive, and this time, let's kick off the show with Ashesha's roundup of what's happening in the sector.
Well, yes, we decided to put the spotlight on India's renewable energy story. And first up, let's talk about the drivers that are driving solar move here in India. First up, domestic demand continues to remain very strong for India's solar industry. Export tailwind is also another big positive because demand from US and companies which have started substituting Chinese products also continues to remain very positive. Global diversification is another trend which is turning out to be in favor of India. Aggressive capacity expansion continues to remain underway from major solar-based players in India. So these are the three main players and three main factors which continue to drive solar demand here in India. Let's also put the spotlight on capacity expansion plans. Installed capacity in India in FY25 stood at 106 gigawatt, which is expected to rise to 290 gigawatt by FY30, implying a growth rate of nearly 3 times, and this is only likely to accelerate after FY30 as well. So that's the kind of capacity expansion and capacity addition India is looking at. Let's also talk about the big export opportunity which India's solar players are enjoying. US demand supported by IRA-linked incentives continues to remain very strong. Global customers are diversifying away from China, and that is a big opportunity for India. Indian manufacturers are now emerging as global suppliers, and that is the reason export is a big tailwind for India's solar manufacturer. Let's also talk about company-wise expansion plans then. Premium Energy has modules worth about 11.1 gigawatt, cells capacity of 10.2 gigawatt, and ingot wafers is about 5 gigawatt. So is the case with Vikram Solar and Waaree Energy. Remember, all of them have aggressive capacity expansion plans going forward. They have already lined up capex. So for example, Premium Energy has 12,000 crore of capex lined up for FY26 to 28 period, 11,200 crore for Vikram Solar, and about 25,000 crore for Waaree Energy. They are also looking to diversify in new areas, something like BESS, aluminium frames, backward integration. Vikram Solar is looking to invest 70 to 75% of their capex in backward integration, and Waaree Energy meanwhile is likely to diversify into exports and BESS as well. So yes, these are the factors which continue to remain at play. But let's also talk about some risks which India is facing at this point in time. High policy dependence continues to remain a concern for the industry. Remember, safeguard duty, BCD, which is basic customs duty, and PLI have been driving this push. But if at all we see some kind of policy reform which is not in favor of the industry, this could be a big risk to the industry. Tech shifts demand efficiency upgrades, which is another risk that the industry is facing. So yes, the industry is enjoying capacity expansion plans, but there are also certain risks which continue to remain a headwind for the entire industry. But despite that, India's renewable energy push clearly is a theme that you need to watch out for the next 10 years.
I have with me Abhishek Pareek, who is the Group Head Finance at Waaree Energy. Abhishek, thank you very much for joining us today on ET Now and being part of Deep Dive. To begin with, Abhishek, we are in a place where the entire solar or renewable space is in a structured upcycle with respect to addition of capacities, with respect to how we are scaling up from here on. How do you look at demand? How do you look at export tailwind and maybe the aggressive capacity expansion which is happening in the industry?
Very good afternoon, first of all. Thank you so much for having me on the show. So, India today has reached a stage where the scale, quality, and execution capabilities in solar manufacturing are firmly established. We are looking forward for a 500 gigawatt overall renewable capacity by 2030 as per government's vision. And we firmly believe that we are on track to achieve the guidance by the government. If we look at the overall manufacturing and demand in India, the numbers are certainly affirmative and supportive. We are confident that we should be in a position as a country to achieve 500 gigawatt of target of renewable space. As far as manufacturing is concerned, if you look at the India's ability to show that India can stand out as a manufacturing hub for the world, the numbers truly speak that over last 4 to 5 years, if you see especially India's ability to export the equipments in both solar and wind and overall sector have been growing in terms of numbers year by year. So certainly the market seems very positive, be it domestic market, demand, and export dynamics for Indian manufacturing companies.
True. Abhishek, if you look and give us a little more idea on the kind of capacity that we would have, because in the past few years we have been struggling with capacity and the government has been putting in ALMN, which basically restricts buying from certain manufacturers only, and as a result of which import was impacted. But then as we scaled up our capacity, that has been relaxed as well. So from a point of view of manufacturing, where are we today with respect to meeting not just a domestic demand of 500 gigawatt by 2030, but also the kind of demand that we are getting from other countries like the US or the European Union?
Sure. So if you look at the government's policy over the last couple of years, especially the ELMM one, it has ensured that the domestic manufacturing flourishes and expands overall manufacturing footprints. When ALMM 1, which was ALMM for solar panel manufacturing, was implemented last year, we have seen the skyrocketing capacities in the overall manufacturing of modules. But certainly, that is also not enough for the demand paradigm in India as well as global markets available for Indian manufacturers. Now, government has come up with ALMM 2, which is for manufacturing of cell as well in India. So from 2026, this year, manufacturing of modules and cell will be the joint true capacities for Indian markets available. So with this, we believe that capacities of cell, which roughly is around 25 gigawatts as per the ALMM recent list, should start seeing upside. However, the demand in India still looks between 40 to 50 gigawatt for the current financial year, and the expectations are this number is bound to increase, considering the government's 500 gigawatt worth of target. So we are yet to see a point wherein the domestic capacities should match up the overall manufacturing capacities as well. But certainly the tailwinds are very positive. The direction is very right.
How do you look at cost as well? Because we've seen cost of modules coming down, or cells and ingots and wafers have also come down a bit over the last few years. Do you see stable cost structures around so that it brings in better economies of scale for the Indian manufacturers as well?
Sure. So with the increase in scale and size of operations, certainly the costs are bound to cut down, and eventually the further impact of larger demand enhances. Because when you manufacture at a gigawatt scale versus you manufacture at multi-gigawatt scale, certainly the cost optimization happens. That is what we see even in Indian markets as well today. When the Indian module manufacturers and now cell manufacturers are enhancing their capacity, the cost of production is coming down, and this is definitely benefiting the end consumer. This should also go well along when the ingot and wafer capacities start coming up in India, because government has also announced ALMM 3 for manufacturing of ingots and wafers as well in India over next 2 years of time. So certainly, when we go further backward integrated as an industry and especially as a company, the costs are bound to remain under control, and our ability to overall visibility on the cost dynamics strengthens with the backward integration.
If you look at the capex for the industry, and I'm talking about just three big players, which is you, Vikram Solar, and maybe Premier Energies. Between you three, you are putting in nearly 50,000 odd crores between FY26 to 28 in capex alone. What is the kind of capacity that this market can hold, and how dependent will you be for exports going forward?
So we have announced overall capex of around 26,000 odd crores over last 1 year, and this implementation of capex should happen over next 2 years of time. So by FY 2028, you should be able to see Waaree's overall ecosystem with manufacturing, which is announced going live, which will include roughly around 27 gigawatt worth of module manufacturing capacities, 15.5 gigawatt of solar cell capacities, 10 gigawatt worth of ingot and wafer capacities, 20 gigawatt worth of cell and battery pack manufacturing capacities, and a gigawatt plus worth of electrolyzer capacity. We are also manufacturing the inverters, which we have recently mentioned that 3 gigawatt is already up and live. So certainly capacities are bound to come in next 2 years of time. As far as demand dynamics are concerned, the domestic demand is certainly giving very positive signal. Against last year of around 25 gigawatt worth of installations, this year expectations is around 40 gigawatt plus. The first 9-month numbers are already giving a positive signal that India is very much on track to surpass the 40 gigawatt worth of installations. Hence, the new capacities are certainly going to help us go ahead in the ladder of manufacturing and being able to supply customers on time at a steadfast way.
One of the tailwinds which is there for India is with respect to exports, European Union and US. How big a tailwind is that? Because we have seen IRA incentives, which was introduced, now put on hold. We while others from another point of view, Indian solar manufacturing is taken seen as a alternative to the Chinese supply as well. Is the opportunity there a mix of challenges and scale which is there, or especially in the US, if you can give us a perspective of what's actually happening there in the US?
So let me first take up US, because US is certainly a very key market for us. If you look at the overall change in the policies in US over the last 1 year, end of the day, the outcome is that manufacturing incentives for local manufacturing in USA have been continued for next couple of years. And that's a very, very positive news for the manufacturers in the US and certainly for us, because we are expanding our capacities of local manufacturing in the US from 1.6 gigawatt. We today are already 2.6 gigawatt with acquisition of a gigawatt capacity this year, as well as we are adding 1.6 gigawatt additional in US. So our total capacity in US shall be around 4.2 gigawatt. So manufacturing in US certainly has a thumbs up as far as the new policies in US are concerned around the IRA and local manufacturing. Now, if you look at the European markets, even there also, the policy measure and policy push are certainly positive for Indian manufacturing as a whole, because recent enactment of net zero support from the European Union, starting from Italy, which has said that they really want alternate supply chain to come to a market like Italy and maybe eventually to overall European market as well and supply to them. So for Indian manufacturers, that definitely opportunities are expanding beyond now US to Europe and certainly towards Middle East as well, because Middle East is also coming up as a very large renewable market. If you look at the numbers are truly positive.
Does it require you to set up facilities in these markets aside of the US, European Union, and Middle East, or you can use India as a base to export to these markets?
So certainly, India can always be supportive in terms of the export to these markets. We have exported, in fact, to European markets in past as well as to the Middle East markets. But if you look at the recent moment, like we have announced investment in the one of the Middle East company for upstream manufacturing of polysilicon, which gives us a footprint in the Middle East market also. Plus, our US capacities are also enhancing. Like India and Oman recently, announced an FTA, which certainly gives freedom for Indian manufacturers to supply to maybe to Middle East market through Oman as well without tariffs. We are also expecting some FTAs with European markets as we look at the government's recent announcements. So certainly the markets are becoming more and more larger for the Indian manufacturers. The only need is to be available in these markets with the bankability behind the manufacturing promises is something that should be able to help Indian manufacturers to grow in these markets as well.
In association with Bank of Baroda, play the master stroke with Bank of Baroda.
That's Air India now.
भाई कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इम्पोर्टेंट हो।
SBI कूलेस्ट है।
What? किसान से NRI तक, Gen A से Gen Z तक, SBI सबके लिए है।
Very good.
SBI, the banker to every Indian. Truly.
Do you see the FTAs that India is engaging in with various countries as one of the key tailwinds which the markets may not have factored in that?
So if you ask us, we in fact believe the other way around. We in fact believe that the tailwinds are bound to continue for maybe multiple decades from here. The overall, if you look at the overall market of Middle East, US markets, European markets, every country is now progressing towards more installations of data centers, and AI boom is certainly going to continue this race for more than above a decade now. So the data centers and AI boom is yet to receive or give the demand to the overall renewable markets in the world.
Are you seeing a bit of consolidation also happening in the Indian market, especially with respect to smaller players here?
So as government is also asking all the manufacturers to go for the backward integration, from modules to solar cell and now even ingots and wafer, government is emphasizing that we have to go for the backward integrated. So for backward integration, what you need is the availability of capital as well as the availability of scale, so that you can also take advantage of the backward integration and upstream manufacturing. So certainly the players who should be able to raise capital, who have sufficient demand available and who are present in maybe not just one market but couple of different markets, to de-risk them should be able to do that. Like at Waaree, we have a very robust network of distribution of retail through our franchisee network, which is around 500 plus retail stores across the country. We also do export. We also do a lot of integration, which includes supply of modules and other equipment as well as installation at site. So integration of overall ecosystem is going to be the key for manufacturers and suppliers to be able to consolidate their position.
If you look at the entire renewable ecosystem, Abhishek, cells and modules are expected to be lesser import dependent by 2030. Means the figures which are talked about is around 0 to 5% import dependence for them. But whereas when you look at wafers and polysilicon, there is a high import dependence which will continue to be there till 2030 there. How do you look at this situation, and is that an opportunity for many of the Indian large companies to backward integrate and fully set up operations not just in India, maybe globally, so that you can supply that to various markets?
Like with the recent announcement of government of ALMM 3, which includes ingot and wafer as also as an essential commodity to be manufactured in India, the signals are very clear that we are not going to stop in terms of the integration of manufacturing value chain in the country. From module to now cell and going to ingot and wafer, probably we can even see more like this when we look at the government's promises towards Atmanirbhar Bharat and manufacturing in India. So we certainly are very positive that over next at least a decade and even beyond that also possibly that manufacturing ecosystem continues to expand, not just towards upward stream or upward manufacturing, backward integration, but also towards the horizontal integration. Like today, we have already started talking about gigawatt scale of manufacturing of batteries also in the country, which truly gives a boost to the overall renewable targets of 500 gigawatt. Like we at Waaree have announced 20 gigawatt worth of battery cell and pack manufacturing over the next 2 years to be installed in India. And that certainly is going to be a key milestone for Indian ecosystem of renewable space.
It's interesting because that's a forward integration which we are talking about for this industry there. How do you look at the entire ecosystem for battery energy storage systems there? Are you able to scale it up? You have the technology for that, or do you need to look at newer partnerships to ensure that you are able to set up BESS? Because currently, if you look at all the new orders which are coming for renewable, it has a BESS attached to it.
Yes. In fact, the government has also emphasized that any project in India of solar should have battery attached to it going ahead. So certainly, if you see all the projects and tenders which are coming to the markets, have solar plus battery built in by default. We as a country are seeing a phase wherein we are transitioning from more of import dependent for battery solutions towards localization of battery manufacturing, and the local manufacturing of battery is certainly going to be a key game changer for all of us. So this trend seems to be continuing and going to help to settle the local manufacturing footprint of India in the overall renewable ecosystem.
How do you look at the unit economics for battery as a whole? We have a couple of orders or tenders which have already been floated and many have bid for it. But from your point of view, what is the kind of unit economics there for battery energy?
I can tell you one thing that with increase in scale and increase in size and implementation of battery-backed projects, the cost of energy, the weighted average cost of energy, or you also call it as levelized cost of electricity, looking to become down with the higher number of installations and more manufacturing footprints in the India. So today we are already having the lowest cost of energy from the especially the solar along with solar plus battery already. And you can estimate one thing that this trend is going to continue with better pricing coming up with more and larger scale of battery manufacturing in the India.
Can you give us some indicative cost which is currently there, and how scale of energy, scale of operations, or or your entire capacity will be able to bring down that cost further?
Over last 2 years, especially if you see the trend of battery energy, the numbers are certainly coming down, and that is the key driver for growth of overall installations of battery-backed projects. Apart from the cost, the important aspect is also the grid stability, which is supported through implementation of battery energy storage systems. From a pricing which was to the north of $200 plus around 2 years back per kilowatt, today the price trends are more than 50% lower than that. We are already talking about pricing between $70, $80, something like that. So certainly the trend is going to be helpful for more manufacturing, local manufacturing, and localization of battery equipments in the country.
One of the things which we spoke about is your export opportunity, and you spoke at length about it, saying how setting up locally in the US can help, expand your capacity and reach there. Uh, What about trade deals like India-US trade deal? If that also comes through, do you see a positive fill up to the entire industry going there?
Sure, we also look forward for some closure on the India-US FTA deal, and we are very sure that government is definitely working towards closure on that. At the same point in time, we also are equally cautious that we have to continuously keep expanding our manufacturing footprints, both in India and US as well, so that we can be in a position to supply to our customers on time and every time on the committed timelines.
Abhishek, it was a pleasure talking to you today. Thank you very much for joining us on Deep Dive.
Thank you so much. Thank you.